more than you need.
Yeah.
No, to the
You know, I bring my helmet
You
because
see him,
I've seen some accidents, and my head is too old to be cracked.
No. That is something you need to take care of always.
Exactly.
So you don't
Without
want
that,
to
it's not.
ruin it.
How is the business going, Nathan? Is it okay?
Yeah. I'll share.
Yeah,
I'll give you an update later when we finish. As you can see, the office has changed a little bit
Yeah,
since
I
the
see
last
a
time
lot
you
more
probably.
people.
A bit of- Okay, so we can start.
Yes.
Okay, we're online. We'll be online in 1 second, right?
Yes.
Okay, so hello everyone. Thanks for joining us today online, and we have a very special guest today with us, our dear advisor, who believed in us in a very early stage of our project, and since then he stays with us both physically and with his thoughts. Correct me if I'm wrong. So Steen Nielsen is today with us, and I will probably start from like basic common question. If you could just briefly introduce yourself so the whole audience will know your background and you.
Yeah. Well, I'm a traditional banker. Been in the financial sector for more than 30 years. Primarily in Europe. I've been an advisor for the World Bank. Been heading up banking business in Lithuania. 6-7 years ago, I left banking. I set up my own consultancy, primarily involved in financing. There are two options: either with people who have money and don't know what to do with them, or people who are looking for money. So that's what I'm doing. I'm looking for funding for projects and so on. So that's what I'm doing. I live in Vilnius. Came here in 2004. Very happy.
Cool. So coming from traditional banking sector, and you've been there, you've seen many changes. What is the perspective like? What is the next step in the banking sector you think is coming, you believe is maybe already happening? I'm not talking about crypto, we'll touch that later, but just like regular banking sector, what is the trend there?
Unfortunately, I think I see it as quite a negative trend. It's almost impossible to open a bank account these days. I mean, the level of information that is required is quite tough, and I think many people will actually consider whether it's worthwhile. Okay. So I think the banks. I know there's a reason for it. Of course, there's a reason for it, but I still think the banks should be very careful continuing down that road.
So basically, the lack of flexibility from their side, right?
Yeah.
But it's probably because of all the anti-money laundering directive. The new one is coming out soon, and it makes sense that they're being cautious. But on the other hand, like we as users, we demand quick, flexible service.
But they are moving in exactly the opposite direction of everything else that is happening in society, and that's why I think where they go wrong. And of course, you're right. There is a reason why that all these new legislation and so on is put in place. But I'm just afraid that all these regulations are hitting everybody.
Yeah.
And is there a need for that? I don't think so.
So mainly, as now we see cryptocurrencies emerging, and some people believe that this is kind of a natural evolution of money. Some say that this is an answer to existing system and existing banking sector. Do you think it is an answer? Do you think it is an evolution, or it's just something else?
Like I've said before, I think in order for cryptocurrencies to become mainstream and being used by the man in the street, I think we are very long way from that.
Yeah.
But I think it's moving in the right direction. But in order to reach that level where we're talking about a much bigger market, well, people may not like it, but I think that we would need to see some kind of regulation.
Yeah, that's definitely true, and
Yeah.
we as the market players now also are cheering for regulation. Although we are very afraid of the situation that is happening right now with the banks, we don't want to be this sector as much regulated as
No.
banks are right now. Although it's also related to money.
Yes, yeah.
And there is also crime involved, money laundering involved, scams involved, and you want normally you would like to regulators step in and say, okay, this is the rules, this is how we're going to play, this is how we're going to protect the users, but yeah, it goes both ways. And with cryptocurrencies emerging, we see another phenomenon, which is ICOs emerging, right?
Yeah.
Where everyone basically with simple lines of code can issue his own cryptocurrency. From your point of view, what are the risks involved? People are investing into ICOs. People are trading those tokens later. How do you see this whole picture from the traditional point of view? Maybe if I may ask from that.
No,
that
I come from the traditional point of view. I probably have a more open vision to what the cryptocurrency can offer. What I think is the biggest and the most dangerous thing in your market is that there are no regulations, so anybody can in practice issue their own.
Yeah.
And by allowing that to happen, you are also extremely open for fraud and scams.
Yeah.
And I think that is a risk. Because just one example will cloud the whole industry. And bad reputation is extremely difficult to get rid of. So, and that's why I'm saying that you might welcome a limited regulation of some kind, basically in order to keep the worst people away from it.
And regarding people, we have here not like people buying into ICOs, contributing to some projects. These are not educated investors.
No.
These are not accredited investors. Sometimes these are just like regular people, random Joe,
Yes.
putting his maybe tough earned salary into something that is very risky. What would you suggest to these people? Like, what would you say they need to look for in order to stay safe, and maybe you have like also I believe traditional rules apply to ICO market also.
Yeah.
It's the same set of rules you use every day.
Yeah, I agree. When it comes to investment like this, I actually don't think there is very much difference from what you have to do from the traditional kind of investments to the investments you're describing. You have to look at the people. You have to look at the people behind. Do they know anything about it? You have to look at the project. What kind of project is it that you're supporting? But these days, people actually have a problem where to put the money, because in our low interest market, it's very difficult to find attractive investment opportunities, because those who already own these projects are not very willing to sell, because what to do with the money after they're sold. So it's sort of a very strange situation. But I would advise people to look and say, what kind of project is it? What kind of people is it possible to obtain references? And then, of course, not to put all your money into it.
Yeah,
Don't put all your eggs in one basket. No. I know it sounds very boring, but I know. Yeah. But you have to be a little bit careful.
Yeah. And with projects now starting, like we had last year kind of ICO rush, everybody was crazy about it, and now we see projects basically starting to deliver, starting to some of them we like market shows that it's maybe not the best solution for the decentralized technology, or other ways, maybe just a scam. I've read somewhere that there is more than, I think, 900 projects that are already, like, you can tell that these are scam projects.
Yes.
So the percentage of like risk here is very, very, very high, and it's shaping the market also. People are, as we see it, people are trying to do their due diligence, be more careful, and basically take care of their money better. So you're one of Scandinavian Investment Fund Association representatives in Europe. Is that correct?
Yeah. Well, I'm working with certain institutional investors. Yes. Yeah.
And what kind of strategies they apply? Like, what are the investments they're looking to? Like, do they trade, I don't know, stocks, or they?
Yeah, but they actually, like you mentioned yourself, diversification is really the key word here. And like I said, don't put all your eggs in one basket. They would put funds into real estate. They would put funds into currencies. They would put funds into stock. They would put funds into corporate bonds. Basically, 10-15% of the assets would go there. Sort of, at the end of the day, they would have a really diversified portfolio.
Okay.
So if anything would happen there, you wouldn't lose all your money.
Okay.
Yeah.
And what are the returns we're looking at, approximate? Like,
if you invest in a good corporate bond, a rated corporate bond, AAA rated corporate bond, you're probably looking around 1.5-2% a year, which is not really very sexy, but it is safe.
Yeah.
Then you would put into real estate. You would probably in our market here in the Baltics, you would probably have a return of 6, 7, 8, 9, 10%. So that's a little bit more attractive.
Already,
that's more attractive. On the other hand, I would also warn people against going into projects where you are being offered 25, 30, or 35%, because there is a reason why they're offering that kind of high returns. It is because it is risky.
Yeah.
It's. I'm sorry, but there's no other way.
But in the projects that the fund is investing in, what is the highest mark of return you can expect, or you did already receive this amount?
We also invested directly into certain companies, and of course there's a chance of having a higher return. But I would say if you, on average, would have a return of 8 to 10% of your money, I think everybody would be very, very happy.
Very happy.
Yeah.
That's interesting. And also, do you do equity deals? You go and buy equity in the early stage, or
we do invest in startups, but again, it's very, very depending on the person or the persons behind. That is, they need experience, they need a track record, and they need to convince us that they have what it takes to execute. Yeah. Because today the key word is execution. Yeah. You can have enough people talking. Yeah. But actually to do it, that's a different.
Because normally when you go in as a fund, and we see that both in traditional finance world and crypto. I'm making this clear line because there is a difference actually between how people invest in regular markets and in crypto markets. But now more and more we see that approach that funds, when they're conducting their due diligence, they're actually looking into team, into their background, what do they have to offer, and not buying into promises anymore. so they want to see. On the other hand, when you go early stage, you kind of buy a promise, but you need to see you need to trust the person who is giving the promise.
It is. You're buying into promises, but it is really depending on the person. It is not depending on a 5-year budget, because that is pure guesswork.
Exactly.
Pure guesswork. You are putting your money into that person who's sitting opposite you, and you trust that he can deliver or she can deliver. That's
And what is the term, like when you put money in? What is the term you're looking into? Like 1 year, 2 year exit, 5 year, maybe longer. Normally, what is the?
Normally, we put in for around 3 years.
3 years.
I mean, you need to give it a. You need to let him have some peace and quiet to work and to prove. Of course, we follow up more or less. Every quarter. Of course, we are following up, and a lot of my time is spent on sitting on the supervisory boards of some of these companies.
Can we touch more a bit on that? What is the supervisory boards? That maybe I don't know if you can disclose which ones you are, but what is the work that is being done there from your side as an investor? Like you have your goals, obviously. The team sometimes has other goals.
Yes.
What is the conflict there? Is there a conflict, and what do you?
There is. The main objective of the supervisory board is actually to protect the investors' money.
Yeah.
To make sure that the management of the company is delivering and agreeing and executing on the terms that we agreed on.
Okay.
So we are basically following up on the management team, making sure that they do what they promised to do. And so that's what we do with our sort of quarterly meetings.
And if the startup says, you know what, it's been a year, we've checked our idea, we checked the market fit, and it's not working, but we might pivot to something else. We have an idea how we can do that, and what is the I believe that happens. Not dramatic.
No, it happens. It happens a lot of times, of course.
How do you react as a person who needs to protect the money?
If you give up on the original idea and original plan, there can be good reasons for that.
Yeah,
absolutely, perfectly good reasons. Things can have changed, and a lot of things can happen which are outside your control.
Yeah.
And then it's better to say, okay, this will not work. We need to do something else, and that is perfectly okay. But if it's because that we haven't done our job well enough, then it's another. Then that's another.
Then you need to go back to the table
and that is no. But in most cases, I think startups, entrepreneurs, call it what you want. They are dreamers, and they have to be dreamers. They have to dream big. And if you agree to the plans, and then it's also your role to support.
Okay.
Has to be a mix of different kind of money. You have to put some money into yourself, because you will never be allowed to play for other people's money.
Yeah.
You need to have you need to invest something. You need to risk something yourself.
Yeah, actually, this is how we got our first investment.
Yes.
At first, we put our money in.
Yes.
And when we went for the seed, to basically to pitch our project to seed investor, the first question after the pitch we received is, how much did you put yourself?
Yeah.
And where did you get the money?
Yes.
Is it yours? What is the stake you're playing? Basically, is it your
what
money?
are you risking? What are you risking?
If you or your family or your close friends are not funding your project, why should anyone else do it?
Why should anybody else be willing? And that is very crucial. And you know what? And those people you're talking to, they would have checked you. Yeah. They would have checked your background. They would have checked all your relations. They're really thorough when it comes to, and of course you have to be when you are giving somebody else your money.
True.
Have to be careful.
True. And what would be the maybe like one advice that you would give, or maybe two advices to startups that are looking for funding? I'm not talking crypto now. Just
in general.
If I would be a young entrepreneur coming to your fund and pitching the idea, what would you suggest? Like I should do? What is the tip?
I would ask you, what is the worst possible scenario you can imagine,
Okay.
and how will you get out of it?
Okay.
Because believe me, you have budgets, you have plans,
Yeah.
but it is never going to be like that. There will be ups and downs on the road, but you need to have an idea when we are all the way down. How do we get up again? Who can help us? Not necessarily only with money, but also with management ideas and so on. Where will we get if we need more money?
Yeah.
So I would say imagine the worst possible situation and then prepare a plan how to get out of that.
Okay, that's actually sustainability, basically. Like
Yeah,
the
yeah,
sustainability
yeah,
of your project, of your idea. how
Like
you
a
can-
fox, you need different exits because no matter how you plan, how matter how you prepare, it's not going to be like that. And then the other, if you are more than yourself, if you have a management team, it is extremely important that everybody knows and buys into the way, the route you are predicting. There has to be alignment in the management, and
Okay.
everybody needs to know where will we be in 3 years, or 5 years, or 1 year, whatever. And you need to make sure that they all understand and they all buy into it.
So basically, a clear vision
Mm.
and sustainable idea.
Yeah,
That's
an agreement among everybody around the table.
yeah. So everybody knows the right.
Everybody knows where we're
direction
going.
where
Yes.
we're going. So on this note, I would like to thank Steen for sharing his valuable thoughts and time with us. It was a very lively and interesting discussion. I hope we'll have more of those, and you know, and your supervision down the road. So thanks a lot for coming and sharing your time with us.
You're very welcome. It's
For
a pleasure,
those-
like always.
For those watching us, thank you for coming online and sharing your time with us. We'll see you soon. Tomorrow we'll have a very interesting guest. Our community will share more information with you today. So if you like our small talks, please join us tomorrow. Bye.